Welcome back to Rockstock Channel. It is Tuesday, September 2nd, and we are back for the first time in a while with a Rockstock recap lithium discussion in which Rodney, Matt, and I will cover a few topics of interest in lithium, mainly looking at the August 31st scoreboard before we host an update with one of our clients, Q2 Metals, which is the lithium industry's most exciting exploration story at present. Before we begin, just some brief announcements following a sunny summer for mining equities of almost all types, including some green shoots in lithium. The August scoreboard, as I just mentioned, have lots of green in the 1 month, 3 month, and year-to-date columns. And we spoke a little bit about that in a 2.5 hour wide-ranging spaces yesterday on X, which attracted over 500 live listeners and had 10 different speakers. We're not going to regurgitate a lot of what we said there, but would strongly encourage you to watch or listen to that, which we're repurposing as a Rockstock channel video and podcast, or just go directly to X if you want to listen to it there. We also want to point to a new research blog that Matt's been writing on RK Equity's website. Go to blog.rkequity.com. He's published two so far. One is called Minor Metals, Major Upside, and a most recent one, which we talked in detail about on the spaces, is DMS, dense media separation versus flotation, and flagged, Sigma and Q2 as a DMS examples and why that's relevant. But expect more blogs every week or so from Matt on that part of our website. And please make sure to visit the main RK Equity website, rkequity.com, and register your email so you can get the Lithium Ion Bull newsletter, which will be coming out next week directly into your email box. As always, you could follow Rodney and me and Matt at Lithium Ion Bull, at Rodney Hooper 13, and at Matt_Fernley on X, and also follow our RK Equity at RK Equity Rocks for postings we just did, including our lithium quarterly. A number of followers on X responded to our publication of one page of the quarterly, asking for the full 5-page summaries of the lithium producer quarterlies, which cover, I think, 11 companies. So if you want that, please go to X, find that tweet, and or email us at rockstockchannel@rkequity.com, and we'd be happy to send you our lithium quarterlies. Just a reminder, we're going to talk about a number of stocks here, some of which we own or maybe advisors to. But as always, nothing that you hear today is investment advice. Please read the disclaimer at the end of this video. And with that out of the way, Matt, Rodney, I did reference in the spaces that Rockstock Channel was among the first and the most prolific to promote the bottom in lithium equities. We had on Ken Hoffman first in early June. Then we had you, Matt, before the Fast Markets Conference. Then YJ Lee and Chris Robb, followed with their bull versus equity long debate. A few of our peers have since now been calling, the bottom, but the consensus seems to be, outside YJ Lee and some, Uber bulls, that this is not necessarily the start of a big rally, but just be cautious. So let's take stock. It's been a fun summer. Most other equities in mining space, in rare earths and elsewhere, gold, are in a hyper bull market. We've had a good bounce from the bottom. So let's take stock. We're going to put up the lithium scoreboard here and just have a look. What's Mr. Market telling us, in lithium?
Okay, sure. Well, I'll start. So, interesting looking at the scoreboard year to date, the chemical producers have seemed to have fared better, particularly out of China. But Albemarle and SQM not too bad either on the New York Stock Exchange. And then more recently, it's been the spodumene producers that have had a good rally. And I always say somehow equities know, and they seem to turn before pricing turns. I think now it is interesting because I guess it ties in with how an investor sees the price movement and what they should be investing in. So I'm going to put it to Matt. Um, the stocks have all been pretty beaten down. You had some commentary yesterday, Brian versus Hard Rock and so on. Based on where pricing is at now and based on where producers are trading at versus development companies, where are you seeing the value? And if you can give us a sort of a price outlook linked to that view.
Well, I mean, I think it's a really interesting question. You know, when we spoke in June, I was saying, look, I'm buying low cost producers, to some extent, low cost developers as well. And that's kind of still where I am. I think that if you look at the price move, it's been primarily a technical price move. It hasn't really been based on fundamentals. So for me, it's not a table thumping price rally. I think it's the price correcting back to reasonable levels off oversold levels where it has been for the last sort of 6 or 7 months or so. And we've had the sort of initial very strong run up really in the whole sector. But now I think it pays to be a little bit more selective in terms of what stocks you're looking at for investment. And the sort of stocks that I'm looking at are investment are pretty much the same stocks that I talked about in June. They're low cost brine producers that look oversold, like sort of Lithium Argentina. The low cost hard rock producers like Sigma, again, which looks oversold and hasn't really participated too much or as much as some of the others in the rally. And I'm also looking at some of the lower cost development opportunities. So we talked about Noah Lithium in the call yesterday. We talked about Galan Lithium, low cost brine opportunities, and then the lower cost hard rock projects, which are amenable to DMS only and don't need DMS and flotation. So they're going to have lower CapEx, lower OpEx. And those are the sort of stocks that I really, am keeping a close eye on with a view to buying at this point in the cycle. And I'm not really chasing the higher cost producers really for me.
And Matt, just in terms of price outlook, what do you need to see happen in terms of closures or regulatory scrutiny and so on to see a price move up to sort of incentive levels for developers?
Really, I need to see inventories falling. Inventories in terms of days of supply, days of demand, I need to see those falling substantially. So I mean, at the moment, we're about sort of 35 days of inventories of lithium carbonate in China. And any fundamental price event is always associated with inventories falling. And we're just not seeing that to this extent at the moment. So I need to see inventories falling. Obviously, it would be helpful to see, more supply coming out of the market, but at current prices, I don't think that really happens. And then the experts in China seem very, very split according to whether we're going to see more regulatory supply cuts or whether we're not going to see regulatory supply cuts. So I'm not sitting on a fence. I genuinely don't know what's going to happen in China with regard to supply going forward. So if that's the case, then I need to start to see inventories falling. If we're going to see a sort of fundamental price rally up to incentive prices. Having said that, I mean, the prices come above incentive prices for some low cost projects, low OpEx, low CapEx projects already. And those are the sort of companies that we mentioned yesterday as being quite interesting. But it needs to come higher to bring the sort of middle of the cost curve on and the upper parts of the cost curve on.
And Matt, I know you keep an eye on this, and it's been in the battery materials review in terms of investment and CapEx into the sector. Is that still running at lows? Is that still going to be the driver for certainly higher prices looking out a couple of years?
I mean, looking out a couple of years, we've seen obviously a huge drop in investment over the last sort of 6, 12, 18 months or so, 6, 12 months really. So we have seen a huge drop in investment, and even the big producers now have been cutting CapEx for the last 3 or 4 quarters. So we are seeing a big slowdown in terms of the number of projects in the West that are coming through. And interestingly, we started to see a slowdown in the number of projects in China that are being mooted as well. So, that's positive for 2, 3, 4 years down the line. And of course, as the bulls talk about, we are in a sector where demand is growing 10, 15, 20% year on year. So we can't really afford too many years when we don't see capital flowing into the sector and we don't see these projects sort of getting underway. So, I think the outlook is middling to positive for lithium. But for the time being, I think that prices are going to be quite volatile, up and down.
Right. And I mean, the one thing, Matt, obviously, there's what's been going on in the States, with Trump and, EVs and so on. But looking again at solar deployment in the first half of 2025, I mean, it's just, I was already outlier bullish. Solar installations are going gangbusters. We're already at 400, give or take, after 6 months, when last year the whole of it was, I think, 593. So we're heading for another massive year of solar installations. Is that going to, given that, renewables are creeping up and up as a percentage of power generation, are we going to see some even numbers beyond my ambitious ones, for battery storage?
Um, it's possible. I mean, the BESS obviously is running very strongly. We had a little bit of a tweak around the Chinese regulatory environment in the middle part of the year. But certainly BESS installations are running strongly in China. It's going to be really interesting to see how they do in the second half, because the first half of 2024 was pretty low and the second half of 24 was quite high. So will run into more difficult comparisons in terms of year-on-year growth rates. But it's going to be very interesting to see how we do in the second half of 25 in China. Out with China, obviously the US has been a bit up and down because of the tariff situation. I think a lot of suppliers and users don't quite know where they are. So we get periods of 1 to 2 months when there's gangbusters demand, and then as we get close to the tariff deadline, it completely cuts out, and then the tariff gets extended and it goes back to gangbusters demand, and then it cuts out again. So the US, we don't really know what we're going to see this year, but where we are seeing really massive installations is the Middle East. And when I was talking to the Chinese installers at a conference at the beginning of the year, they were all saying, well, the Middle East is just amazing. And increasingly, we're starting to see Africa take off as well, and Latin America to some extent. So I think, the economics of BESS, solar plus storage, wind plus storage, have changed so dramatically over the last 2 years because of the reduction in battery prices, that the goalposts, we say the goalposts have changed. I mean, the whole bloody picture's changed. It's so much of a significant change. So I think,
But Matt,
BESS
there's
is really
also
fair.
the technology as well has improved
Oh yeah.
significantly.
I mean, the tech is amazing. I mean, 2 years ago, the standard tech for a 20-foot container was something like a 2 megawatt hour unit. Now we're talking about 5 megawatt hour units. There are guys in the market with 7 to 9 megawatt hour units out there. The efficiency of the product compared to what we saw before is just, head over heels better. We're seeing, 500 amp hour battery formulations, rising to 700, 900. It's just the technology improvement is just, it blows everyone away how fast this industry is changing.
And just from a margins perspective, Matt, you look at, you know, I guess there's always the published numbers versus the reality of the cash flow statement, which is what I always look at. Is that showing, is there going to be some give on that front? Can people
in
keep tapping the
in
market
the
for money?
in the miners or in the battery makers?
In the miners.
In the miners. Um, I would say that there is some, how should one put it, interesting work going on around costs for some of the miners. And I completely agree with you. I always tend to look at the cash flow statement to get a genuine idea of what's going on. It is a particular bugbear for me that there is no standardized method of reporting in the lithium space. Uh, and I have complained to various people in the industry at various times that really, we do need something that's standardized so that we as investors, we as analysts can get an idea for what's genuinely happening. I think the operating position for a number of miners is not quite as rosy as the cash cost data would imply. So I think that there's probably a little bit more pressure on some of these operators than perhaps you would think. And I'm talking about Western Australia, and I'm also talking about Africa to some extent as well. So yeah, I wouldn't be surprised if prices do correct a little bit from here if we start to see some pressure on some producers.
I want to chime in here, go back to the scoreboard to actually flag some changes we made in recent months. So we used to, in the emerging projects, just rank those as by market cap, but we've now segmented them into the 4 segments. So emerging projects shows hard rock, sedimentary, DLE brine, and salar brine. So I want to just pick out some of these, but also make a comment that capital raisings and M&A, Core Lithium that just raised $50 million, Q2 raised 26 million, Anson Resources, which was the best performing stock on the scoreboard last month, and we featured them last month as well. They've come in a bit in part because of that capital raise. And then there's M&A. POSCO is going after this Lithium South development, but we commented in the spaces. I don't want to talk too much about it, about the various types, and that there definitely seemed to be a distinct, preference, for hard rock, or conventional, salar brine, and hard rock versus, again, this was not just been the opinion of, the 10 people who kind of chimed in. But, the scoreboard, if you look at it, DLE brine, Vulcan, and Standard have north of 600 million market caps, right? So Mr. Market's telling us if the equity markets are ahead of prices, are they ahead of, development risk, et cetera. The market's telling us that Vulcan and Standard are going to succeed, more likely than maybe some of these other hard rock stories. That's just a comment out there. Chris Robb was he had an argument that, like you said, like the most undervalued or the highest risk plays are the ones that can move the most, right? So there wasn't a lot of love in the spaces discussion, for maybe some of these other companies that we've had on Rockstock channel, like Surge Battery Metals, Century Lithium, Jindalee Lithium. But these stocks at 20, 30 million market cap, even Winsome Resources, you were saying, Matt, in your video, not only go for low cost producers, but find companies that are trading at or below replacement value, right? So I think names like that, to the extent that I was looking at this 2-3 years ago, right? And it was filled with billion-dollar companies. I called them like the land of unicorns, right? That there were 10 or 12 lithium, emerging projects that were all unicorns. Now, a lot of them are down, 80, 90%. If I could flip, we also put out the rare earth scoreboard. You look at MP Materials has an 11 billion market cap. Linus has an 8.75 billion market cap. that's about the size of Albemarle, right? And SQM, and bigger than Alcoa, 130 year old, aluminum producers. So, to the extent, the Albemarle is way off their all time highs of like $300, right? But they're and SQM, and they're producing much higher volumes. So, anyway, this is just a bit of a soliloquy here, or monologue, but I'm just staring at some of these numbers: 20 million, 30 million, 50 million market value. They could very easily be 200, 250, a billion market cap, right? So, any thoughts on any other particular names, that stand out from prior cycles that maybe some people have forgotten about, that are worth revisiting?
I wouldn't say sort of prior cycles, but coming back to my view that, I mean, yeah, I think you've got to look at development assets in terms of how viably they can be developed. Chris Robb had this very interesting argument about incentive prices. And I think that incentive prices is a very powerful way of looking at assets. I mean, one of the big issues, obviously, with sedimentary assets, with DLE brine assets, is they've all got huge upfront capex, or the bulk of them have got huge upfront capex, even if they're much lower on the cost curve than the hard rock guys. So, if I've got a stock with a $50 million market cap and a project that's going to need $1 billion or $2 billion of capex, how viably is that going to get developed? Whereas if I'm looking at a hard rock asset which has got a $50 million market cap and maybe a $200 million capex, is that much easier to get developed? And I think probably it is. So I think that's a way to look at it as well. The other factor obviously is where prices are currently compared to incentive prices. And as Rodney said at the beginning of this call, you know, prices aren't quite up to incentive price levels for a lot of these projects, particularly those that require a large amount of capex. So, we need to see prices move above a certain level, whatever it is, $1,200 a ton spodumene, or $15 a kilo lithium carbonate, lithium hydroxide, before it brings a lot of these development assets into play. Having said that, there are 4 or 5 development stocks out there that I do think look massively undervalued at the moment. Assets that there are under construction or could be under construction in this cycle, and mostly sort of DMS assets. I mean, one of those is Atlantic Lithium, in Ghana. Had a bit of an issue with the Ghanaian government, but a DMS asset, a long way towards funding, very close to the coast, infrastructure advantages, etc. Trading, very, very low. Q2 metals, which we've talked about quite a lot over the last little while, very early stage asset, still at the exploration stage. Not a lot of development work being done yet, but more development work to be done. But it looks like a very large scale asset and very close to infrastructure. And I think that's going to be a differentiating factor. And then obviously the Brazilian assets like lithium ionic. So I think, those are the sort of assets that I'm looking at in this cycle. Hard rock assets that are close to infrastructure, or brine assets that have a high enough grade to be produced with evaporation rather than needing DLE as well.
Okay, great. Appreciate that. And yeah, I think core lithium falls into that, as a brownfield, low capex, relative to market cap. That was a point you're making. Which ones are, I think Sigma Lithium, and Sayona-Piedmont. If I look at, I spoke to, the Sayona and Piedmont people in last week, and now that the merger is complete, I think they have an overall, they're going to have like 200 million Aussie in cash once the merger is complete and the RCF deal comes in. And I think the combined market cap is like 600 or 650 million Aussie or something like that. I was doing math. It was about 325 million US. Um, is the combined market cap, after, the enterprise value. And could you replace North American Lithium, for 325 million, which is now, producing, they had a great quarter, uh, with good recoveries. So a brownfield expansion from there combined with Moblon, these are sizable assets. And then they're partnered with Atlantic, as you just described. So, like, I'm bullish, the Sayona-Piedmont merger. I think there may be some funky trading activity that's happening now that the merger's gone through. This won't be formally a levra, I think, for a few more weeks, and they have a consolidation in the stock price happening. I think a 150 to 1. So anyone watching this who's in like Sayona and Piedmont, I think there's some merger quirkiness there, but that's one that's highly levered to rising lithium prices, because right now they're selling to Asian customers, but they have Tesla as a customer, they have LG as a customer, and Rio Tinto. I mentioned this. They're going to be coming out, I think, by the end of the year with their overall lithium strategy. So we may hear some comments about Quebec. So anyway, I don't want to go too long here. Let's end this on this Quebec discourse, because we are now going to introduce Alicia Milne and Neil McCallum, and the next video for Q2. As we enter the conference season, it's now everyone's back at work in North America and Europe. We have a bunch of conferences. Matt, you're going to be here at Bull's Lair in New York. We're going to visit Hyperion X and a whole bunch of other people in New York. And excited. Hopefully the momentum, the scoreboard in September, October, and November and December will continue to look green. Thanks for the conversation, guys, and we'll talk soon. All right, as promised in the Rockstock recap you just heard, Matt and I are back now Thursday, September 4th, with another update with Q2 Metals CEO Alicia Milne and VP of Exploration Neil McCallum, following today's press release in which the company flagged increased drill activity and an exploration update on its Cisco Lithium Project in Quebec, Canada. We last spoke to Q2 in late July following their completion of a $27 million financing, which followed an announcement of an exploration target estimating a range of lithium mineralization for Cisco from 215 to 329 million tons at a grade ranging from 1.0 to 1.38% Li2O. In addition to this video, we'd like to suggest our viewers read Matt Fernley's recent blog post on RK Equity's website, blog.rkequity.com, in which he discusses DMS versus flotation for spodumene processing. I'd also encourage you to listen to the live Spaces discussion we hosted on Monday on X. That Spaces discussion, which will be distributed as a Rockstock channel video and audio podcast, included extensive commentary from 10 participants, including geologist and fund manager Tom Woolrich of Deutsche Rohstoff and Jody DeRouge, one of the leading experts in Quebec's lithium geology, both of whom offered constructive comments regarding Q2's exploration and metallurgical results to date. As a reminder, RK Equity are advisors to, and I hold interests in Q2 Metals, but we are not, of course, financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimers at the end of this video. Q2 Metals trades on the Toronto Venture Exchange, ticker symbol QTWO, and on the OTCQB exchange ticker QUEXF. The current market cap's about 146 million Canadian dollars. Q2 Metals has research coverage from Canaccord and Argonaut. If you're interested in seeing this research, please email us at rockstockchannel@rkequity.com. And if you'd like more information about Q2, please visit their website at q2metals.com, and you can register your email to receive their press releases directly. You could also follow Q2 on X at Q2 Metals and also on LinkedIn. And don't forget, if you like this and other Rockstock channel videos, please subscribe, like, and comment on this video and hit the notification bell to be alerted when future videos are released. And with that, welcome back, Alicia and Neil, to Rockstock channel. I'll let Matt take it away from here.
Okay, I should probably comment as well that I hold Q2 metals as well. So just to be clear where we're all coming from. So let's take it from the top. You've had 2 releases since we last spoke, which I think are quite important. First of all, you've obviously had the quite substantial capital inflow. And you've noted in the release that you're going to put more rigs on site and accelerate drilling. But you also said that you are still waiting the assay results from the beginning of the summer program. So when can we start to expect some of those assay results to start drilling through?
Yeah, that'll be very soon. Likely within the next few weeks. Just waiting on the last batches of results from the lab. After they've gone through all the QA/QC on our end and everything, should be ready to go soon.
Okay, and then in today's release, you talk a little bit about the drilling that's going on, and you talk about infill scale spacing on the main mineralized zone. Now, just to understand that, are you talking about infill of the exploration target, or are you talking about infill drilling from the holes that you've already put in?
Yeah, it's more or less the same thing. The exploration target covers drilling from what would be like 98% of our drill holes so far. We did a few holes toward the east that didn't have very much mineralization that was included in that exploration target. So it'll be infill drilling pretty well from that main mineralized zone, which is the exploration target.
Okay, so but there's potential. I mean, you're still working to understand what the geology of the area is. It's not sort of like, you're going to like 10 meters drill spacings to prove up the numbers. We're talking still
We do that
exploration.
sort of on a stepwise level in terms of infill, doing what we need to do to get to each level of confidence as we go from inferred and then indicated, measured, and beyond. We're doing, not that really tight, 50 meter. We're going to start with roughly what would be 100 to 125 meters for the inferred roughly. And then once that's complete, we go and keep drilling more, make sure all those contacts are in place, fill in the gaps. But that is enough room for us to infill at that scale for pretty well all of the exploration target. But of course, we'll focus on what would be more economic in terms of near surface, higher grade stuff. We know there's open-ended mineralization at depth, but at a certain point, we need to cut it off somewhere because we already have that suggestion on the exploration target that we have a lot of tonnage. That's not going to be a problem for us. So it's just narrowing down on the most economic areas of the project for us, potentially down the road.
Okay, and what does the winter drill program look like now you've got this substantial injection of funds?
Exactly. Well, we're going to be ramped up to 4 drill rigs in the winter, starting in November. We've already got another one on there now, and another one like just arrived. So we're as soon as that money came in, we turn on the dials for the drilling. So the winter will be kind of continuing through what we'll ramp up to starting November, and it'll just be continue that infill space drilling to get us toward what we're anticipating that initial mineral resource estimate, which is obviously higher confidence than that exploration target.
And so you'll have pretty consistent drill results really between now and say the beginning of next year.
Oh yeah, exactly. So throughout the summer, we just had 1 drill rig until we had the funding in place. As soon as that funding was locked in, then we ramped things up. So it's been a slow summer, more or less, but we're now ramping things up as quickly as we can.
Okay, and in your drilling, obviously you're assaying for lithium. Are you assaying for other elements as well? Are you looking at cesium, rubidium, other raw materials?
Yeah, we assay for all that sort of stuff. We know cesium, rubidium is getting a lot of attention recently, and we're testing for it. We haven't put out any results on that, but we do note some elevated areas, but not enough to really string together a mineralized zone. The interesting thing about like cesium, for instance, is it seems to be really small pods within a larger spodumene pegmatite body. So with the drill spacing that we've had up until now, it's been a lot of gaps where you could find a mineralized zone of cesium. So we'll keep an eye on whether there's a zone that does develop. But right now, there's nothing screaming that we really see. But we're definitely paying attention to it.
Okay. Let's talk about the Met test results, because that's quite a major development. And obviously, we talked about that last time we had an interview with you guys as well. Can you sort of just give a little bit of a summary of what you released?
Yeah, absolutely. So the whole goal of the project for the Met work is to know whether or not that dense media separation processing would be feasible for our project, because that would be, if we can stick to only doing that and not including the flotation work during the processing, that will make the economics a lot easier, because it's just a simple process requiring less power, less capital infrastructure on that flotation. So the idea is to do the heavy liquid separation testing, which is a simpler test to determine how well the spodumene separates from the rest of the minerals in that pegmatite. So we crush it down to a particular size fraction and then see whether the spodumene sinks or floats at different liquid densities. And then we can calculate the recoveries based on that. And then we can also tell what the iron content is as well, to make sure that we're staying below that threshold at which it becomes a difficult element for further processing. So what we found so far is that we've got, in that roughly 70% range for recoveries, which, it's good. It's not as good as some others out there. It's definitely the first pass of results. So we can tweak a few different elements of our testing to get that more optimal range on recoveries. So this is really just a starting point for us.
And obviously, this is a pretty small sample size. What are your plans, sort of, to take the Met testing forward? I mean, how do you plan to do that?
Yeah, there's a few things we're looking at doing, which is this was 3 composites from 3 different holes on our project. Holes 18, 21, 23. But that is a fairly good spread across the deposit, but we just need to make sure that we have all of the potential deposit covered. So there's more HLS testing that can be done, just collecting a lot more samples, getting that to the lab, making sure that responds in a similar way. And the pegmatite is fairly consistent, but there's some variability within that, different styles of pegmatite. So we just want to make sure that all different styles of the textures that we see respond similarly. And including wall rock into that as well is important, because when you're actually mining the rock, some of that wall rock does get included if it's rafts or, whenever they're drilling and blasting, some of that wall rock does get included. So we want to make sure that that is easily separated as well. And we can do certain things that we didn't do, like, it wasn't necessary to use a mag separation on what we had, because we knew it was very clean all the way to the end. We didn't need to add that circuit to the testing. So that's one other element. And as well, taking large bulk samples and eventually doing a DMS test itself. So it would be a more real life scenario of how it's processed. That would be more detailed and more informative than just the HLS testing. So lots of different things we're working on.
Okay, that sounds great. And we've talked before about the crush size. I think, some of the DMS only projects that are in production now, they've got closer to a 10 millimeter crush size. So what's the sort of impact in terms of going for a 6.5 millimeter crush?
Yeah, okay. So partly to do with how well the material responds to different crush sizes. 10 would be optimal because you don't need to have as much power to crush that material. So you have cost savings there. But if you don't get as good recoveries, you do need to crush it just to make sure that spodumene separates from the rest of the minerals in that rock. And that just requires a little bit more power to do that. But you'd get better recoveries if that is providing a better liberation of those actual grains of spodumene. So
But obviously, we're still focusing on crushing and we're not going to grinding, which obviously makes a big difference. We're
yeah,
talking millimeters, not
exactly.
microns.
So you can, yeah, exactly. So you can get higher recoveries, and if you crush it even further to a point where flotation is necessary, that's an area where we might do some test work on that to see how the material responds to the flotation. But it's definitely not like a goal for us, but it could be adding value down the road to recover some of that finer grained material that got really over crushed during the process. The fines that don't get responded to the HLS, it could be recovered later, but it's something that would be stockpiled. But we just want to make sure that could be feasibly recovered down the road. So all things we can test.
So from what you're saying, you will continue doing metallurgical testing all the way through the sort of exploration stage on
Oh,
composite
definitely.
samples, and then you'll wrap that up to maybe a bulk sample.
Oh, definitely. Exactly. Yeah.
Okay, cool. Howard?
Great. Well, Q2 is very much an exploration story, and I hope our viewers appreciate the extensive focus on drill results and metallurgy. Alicia, um, it's now September. We're in the end of year, beginning of the end of year season. What do you have on the planning docket? As I think I may have mentioned it earlier in what we recorded, but certainly in the spaces that we had, that Q2 is is now well funded to continue their exploration, but it is kind of the most exciting exploration story going on in lithium, to date. So, and I'm constantly getting questions, not only more from Australians who know their geology than anywhere else in the world. So I know there's a lot of our viewers there, are watching that. So from a news flow and a marketing, what are your plans, I guess, between now and the end of the year?
Yeah, for sure. Neil's got lots of stuff planned. So with the 3 rigs currently spinning, we're gonna have a constant flow of assays coming out. We still have work that was done this past summer, so assays are coming on that. I believe we have some visuals that we'll be announcing in the future. Today's news release was pretty much setting the table for the fall, winter. We've got lots of news flows coming. So, even though it was relatively quiet this past summer with just the 1 rig churning, we still were able to do a lot of stuff like the met work. We've got permitting that we've had in process for the past couple of months here for getting an access road in, and now we're looking at options for a camp, and there's all the other things that go along in the background that people don't necessarily see that we've been working on, winterizing the camp and that sort of thing. So it's going to be a busy fall, it's going to be a busy winter, and we're going to be hitting the road soon as well, doing a bunch of marketing and getting out there and meeting people, meeting funds, meeting investors.
But where are you going to be in case some of our viewers are in those locations and want to speak to you?
Yeah, we've got a lot of places lined up here. We're doing a site visit in 2 weeks, and then Neil and I are hitting the road. I'll be in Hong Kong at the 1-to-1 conference, and then Neil and I are going to Korea and Japan on a investment Quebec junket trade mission. And then we come back, and then we're hitting New York, and we'll be in Montreal at the Explore conference. And then I think there's a one-to-one conference in November, as well as the Swiss Mining Institute we'll be doing in Zurich end of November. So
That
it'll be a busy
one-to-one in November is in London.
Yeah.
I think I might be there with Matt. So great. So any investors out there in Hong Kong, Korea, Japan, London, or Switzerland and want to meet up with Alicia and or Neil, please, you could reach us at rockstockchannel@rkequity.com or, tag them somehow on LinkedIn or X. Okay, so excited for the upcoming news flow. I don't know if we talked about any expectation or what is the expectation for the first kind of mineral resource estimate?
like timing wise.
Yeah, timing wise, exactly.
First quarter 2026, Neil.
That's the goal. Yep.
Okay, excellent. All right, so anyone who follows the Lassonde curve, could understand where you are at the exploration, part of that curve, and there were some very large numbers, spoken about in our X spaces by some of those commentators, and your exploration target is very large. So I think there's a very big gap between your market value and the size of that resource if it does materialize in that. So hopefully with some tailwind, with some lithium prices in the next kind of couple of months, the market will, remember how the Lassonde curve works. Your stock price at 78 cents is about where it was at 76 cents when you did the financing. It's been quite a bit higher than that, in the last kind of couple of weeks. So take that for what it is. It's not investment advice, but we'd encourage all of our viewers to, look at seriously at Q2. With that, I don't have any more. Matt, do you have anything to add?
Yeah, I mean, I would just say that there's a very few hard rock lithium projects in the world that are so close to infrastructure, and for me, this is an emerging, potentially world-class resource, very, very close to infrastructure, the railhead, which makes a big difference, I think, with a lot of these projects being stranded locations, large trucking distances, etc. So I think, that's another reason why this project stands out for me as being very interesting.
And that's great. And I think we're going to hear quite a bit more about Quebec from Rio Tinto. Paul Graves is going to be speaking at the benchmark event in November. And I think they're going to articulate a strategy, not just for Argentina, but also in Quebec. And also now that the merger between Sayona and Piedmont is done, I'm expecting you'll hear from, the new Elevra, later this month or into October, what their strategy is there. So Quebec will be, again, more prominently on the discourse in the lithium universe, in addition to obviously Q2 and Patriot and other stories out there. All right. Thanks very much, Alicia and Neil, and look forward to chatting with you again soon.
Thanks, guys.
Thank you.